A lot of people think that when you have a private mortgage on the home, you can actually repossess the home as the mortgagee. You can't here in Canada. I made a video on, I think we were talking about private money, how I do private loans and stuff like that. And I believe the guy was asking about recourse on a private loan.
So he was
private mortgage.
He was thinking of doing a private mortgage.
So this is a guy's comment. That sounds scary. What kind of repercussions could you have as a private lender for someone who just takes your money and runs? So really interesting question, to be honest with you.
Yeah.
And I've actually been burned in a couple scenarios like this because I left it up to the lawyers to do the due diligence on my behalf without doing my own due diligence, which I will never do again. You think you're hiring a legal team to do the due diligence that you need to do, and then they don't. And then when shit hits the fan, there's no recourse, or not as much recourse as you had hoped, right? So I'll give people a scenario of when I lost money investing, as well as a scenario when I've done a private mortgage, they stopped paying, and I had to go after them, but I had enough recourse because I did my due diligence. So let's do number one, where I lost. So scenario number one, I was lending to a business. You're very familiar with this. Fucking brutal. But anyways, I was lending to a business, and lo and behold, stopped paying. So in the beginning, what we did was they had a vehicle and some other stuff. In the beginning, there was enough equity, so I was told by the legal team, on this particular. It was a large vehicle. It was like an RV style vehicle or something like that. That in the event something happened, I take the vehicle. I'm in first position on the lien on the vehicle or whatever. We got a lien on it. Yada, yada, yada. Well, shit hits the fan. Can't get my money. Guy turns out to be some sort of scam artist, which, in the beginning he checked out like he wasn't. The business checked, everything actually checked out, which is really odd. And in the beginning, he was paying, and we were making a decent amount of money together. But, things happen. I don't know if he's actually a scam artist or if he, things didn't go as planned and, I'm the scapegoat. Who knows? Doesn't matter. Well, turns out that there was another loan on the vehicle, something like I'm gonna butcher this whole. This was a while ago, so I don't know exactly the details, but there was something that didn't allow for me to repo the vehicle or force a sale of the vehicle to recoup my funds. We're still in a legal battle to find out, where the money that I sent, where it went, because it went somewhere. Well, it went to another company. Then it was funneled somewhere. It wasn't sent to the actual operating company. What had happened is during the due diligence phase, or at some point in time, they had shifted where the money was going, or not shifted where the money was going. The money was always going to one place, but had shifted the operating company, something along these lines, where they were taking that money and funneling it to. So now we have to trace the money of where, once it went to, 1, 2, 3, 4 Ontario Inc., then it went to, 5, 6, 7, 8 Ontario Inc., which is the operating company of the business operating. We have to figure out, did it go there? Or did it go from 1, 2, 3, 4 Ontario Inc. into Buddy's personal account, someone else's personal account? So the repercussions of something like that, when you don't do your proper due diligence, or you think you've done proper due diligence, is you have to hire a lawyer. And what a lawyer will do after you examine the parties, if you don't find the answers during the examination, if they don't release bank documents, the courts can actually request you, or the defendant, we'll call him, to release bank documents, finding out where that money went, because the money went somewhere and they're on the hook for it.
Yeah.
Right. So the stage that we're in right now, is finding out where the funds went because he's not cooperating, oddly enough, right? So that's the stage that we're in there. And then once we find out where the docs went, then we can start kind of looking into, okay, well, if the docs or if the money went to, 5, 6, 7, 8 Ontario Inc., now let's pull those bank documents. And we have a court order to do it. We will have a court order to do it because I have a personal guarantee. I have a corporate guarantee. And I don't remember the exact terminology, but when money leaves a certain company and you owe that money, no matter what is going on, you have an obligation to open your books and show, well, where did that money go? Because if the money went somewhere or it was like expropriated to someone else's account or someone else's business or whatever, then you could start going after them because it's not their money. It's my money. You get what I mean? So one of the things that I could really tell people is, this was a while ago, and I'm having to go back and find documentation of what bank account and which funds went where when I released funds to this particular person. Because you might not think in the beginning while you're doing the loan or advancing funds, if this person says, oh, hey, just send it here, it's a big deal if you don't keep track of where that, hey, just send them here is. You have to really pay attention to where the funds are going, because if shit really does hit the fan, you're going to have to get that information back to the lawyer so that they can say, okay, well, it went to this bank account to this corporation. You get what I'm trying to say? So it's best to stay with one corp, one bank account where you are always advancing funds. Because if you don't do it that way, you might have a paper trail mess. So that's number one. Number two, I've done a lot of private mortgages for, residential homes, things like that, first position mortgages. I usually don't do anything, second or third position or even like unsecured loans or anything like that. That one scenario that we just talked about was an anomaly. So what ends up happening, and this is, Canadian law. I don't know exactly what happens in the US, but over here in Canada, what will happen is you advance funds for the private mortgage. If they stop paying, Canadian law kind of allows for people to get back on track. There's certain things there's certain provisions in the law that, okay, well, hey, if you're not able to make the payments, especially in like landlord tenant, hey, you can go on a payment plan. I don't believe there's like a payment plan for something like a private mortgage, because the private mortgage is the payment plan and you're agreeing to that. It's not, this isn't like a landlord tenant board. If you don't pay your mortgage, that's a problem. It's a big problem. It's already a payment plan. You can't, what are you going to do? Break up the mortgage payments even more? It doesn't matter. Like you already agreed to the payments, right? So what happens is, or from my perspective, you contact the person, you start putting a bug in there saying like, listen, like you're under an agreement. If you don't start paying, we'll give you X amount of time to make good on the payments per month. If you don't end up paying, we're going to have to, take things we're going to have to escalate the situation. So when I have been in these scenarios, I've only been in 2 of these scenarios with private mortgages. So what ends up happening is you end up forcing a sale of the home. A lot of people think that when you have a private mortgage on the home, you can actually repossess the home as the mortgagee. You can't here in Canada. I shouldn't say you can't. There might be certain scenarios where you can, but I was told by my legal team that if you try to even do that, or try to even work out a backdoor deal with the homeowner where you take the home, you could open yourself up to a lot of liability. So number one, I would advise people not even try to do that or open up the conversation, because the way the law works is a lot of things can be misconstrued and interpreted into different scenarios by lawyers to develop a narrative into someone else's favor against you. So number one, try to work out something with the mortgager. If that doesn't work and they're still late or not paying, you go right to your lawyer. I would not let it go over I wouldn't even let it go over, a week or two. I would get right on this, go right to the lawyer, and start escalating the situation. So what will then happen is you can force a sale of the property, and the proceeds of the property end up going to you for what's owed to you, and you are not allowed to recoup any extra than what is actually owed to you
In principle.
Yeah, you
Just no
so
interest.
if they've paid principal, I've only done interest only loans.
Oh.
Yeah, so I would venture a guess that if there was a principal and interest loan, anything that was paid towards principal is not yours to keep in the property. You are simply making money on the interest, right? So you're not going to be able to recoup the equity built in the property. In the event someone's in default, it's only going to be what's owed to you, and anything extra that they get for the home. And I remember going down this road, saying like, I tried to fight for extra, opportunity cost on my money and this and that, and it didn't work. So all I ended up getting was what was owed, right? And then what I did get was essentially interest on the money that I did not receive over a specific period of time, if that makes sense.
Is that the length?
So I guess that would be
the length of the term.
Yeah, so that would be essentially, I guess, the opportunity cost, right? Because if the legal battle goes, after 3 months, and you're making X amount of percent on that money, but you can't use that money for anything else, they allowed for a reasonable interest rate that was to be paid during that opportunity cost of the legal battle. So that's what ended up happening.
Interest rate is like what was in the agreement.
I don't remember if it was the same interest rate. It might have been a more reasonable interest rate.
So if your private mortgage is at like 15 or 20%, they might choose like 10 or 12%.
I don't remember 100%, but I remember it being allowing for us to. I shouldn't say we didn't allow for opportunity cost of missed payments, because I believe that was allowed, and we did win that. But we weren't able to go after, a hypothetical scenario where, hey, I didn't have this money and it didn't allow me to go buy a house with it, or it didn't allow me to go do this with Bitcoin, and Bitcoin increased by X amount of. Yeah. You get what I'm trying to say? It didn't allow for anything like that. It had to be related to the scenario.
Got it.
So we did actually. We were able to, claim for opportunity costs. I can't remember exactly what the term would be for that, but it was only related to that scenario. Yeah, that's it.